This has been a wild week. You've had a few of those in your time in the crypto market. Where does this one rank?
Oh, it's actually right on the weighted average. There have been about 6 big price cycles in crypto since we started 10 years ago, and the average has been a 62% bear market, and we're literally right on that right now. So my instinct, having seen a lot of these cycles, is we've pretty much done all we need to do, and the markets can get going back up again.
You know, your website, Dan, has mentioned that you guys are actually an investor in Anchor Protocol, which has a relationship to TerraUSD and Luna. So how are you being impacted by the moves that we've seen this week?
Yeah, we've been invested in several of Terra's projects over the years, since 2020, I guess. And we're investors, so we buy things when we think they're cheap, and then once they've achieved full value, we sell things. And so we don't have any positions right now in any of those projects.
Dan, let's broaden out here. You wrote a letter earlier this month, and you said that this might be the last time in history one can buy Bitcoin that cheaply. You got Bitcoin trading. I'm just going to very quickly check the prices here. Bitcoin trading with a 29,000 handle. Are you buying the dip?
Yeah, so we're fully invested. We think it's a great time to be long. And the point was most markets just kind of cycle around. And the joke in our investor letters, I was trading dollar yen for 35 years, and it's literally where it was when I started in 1987, whereas crypto may never be at this price again.
All right, Dan, let's dig a little deeper just into some of the market dynamics. You made a reference to sort of the historical patterns with crypto trading. And last time you were with us, I believe in March, you were talking a little bit about the correlation when you see a lot of stock market selling, when the S&P 500 is under pressure, it is inevitable that you'll see that crypto pressure. Looking back at 2020, very quick dip. More than a dip, a 30% slide for the S&P 500. And if you stretch it out a little bit earlier and then a bottom a little bit earlier, the price of Bitcoin came down about 50%. Now, this time around, we were talking yesterday about how the S&P 500 was on the doorstep of an official bear move. The correction in crypto we started to see last year, and based on that measure, we'd already come down about 50%. What would you say about how crypto is trading now when it compared to the stock market?
Yeah, so I'd say that I think that correlation has to break down soon. In the 6 downdrafts in the S&P when Bitcoin's been trading over the last 10 years, the correlation's been very high, but only for 71 days on average. This time it's been 4 months, so it's twice as long. Obviously, it's a much bigger impact on the S&P. So I think pretty soon they're going to decouple. And when you really think about the driver's higher rates, which is driving bonds down, driving stocks down. But crypto doesn't really have any impact from rates. So I think it'll start trading with other things like gold or oil or commodities that really just aren't related to the interest rate markets.
Let's talk about interest rates for a second, because you've been pretty critical here in a lot of your letters to investors, Dan, about the Federal Reserve policies. You've called the bond markets a Ponzi scheme. You said the Fed has manipulated the bond market. As we look to quantitative tightening, what do you think the distortions are going to be for stock and bond investors?
Yeah, so the Fed ended up buying $6 trillion of bonds and mortgage-backed bonds, and that is essentially funding people to go out and buy a house. And with mortgages at 2.5%, where the Fed drove them to, and the Case-Shiller index of housing going up 19.8%, the Fed's basically daring you not to buy a house, right? So with that, it created a huge boom in housing. A record amount of Americans took out mortgages last year. It's $1.6 trillion. The wild thing is the Fed actually did more than 100% of that lending itself. The Fed was basically the mortgage bank for the United States the last 2 years. And investors did what's probably rational, is borrow from literally the Fed and go out and buy a house. It's going to take a lot higher rates, I think, to break that psychology.
Dan, in a previous life, you were a Goldman bond trader. So we got to talk about bonds here. It's pretty consensus that the bond bull market that we've come to know is coming to an end. What reverses that?
Yeah, so I think the important point is there's no working age person that's traded in a rising rate environment.
Careful, you're speaking to a millennial here.
Well, I'm 56, and I got to Wall Street 6 years into the bull market, and that basically built everything out. The next few years, I think rates are going to be rising, and Yeah, you can't see the Fed stopping tightening until either the housing market rolls over or unemployment comes off what is, even Chair Powell said, an unhealthy low. Unemployment claims hit an all-time record low. Only 1 out of 1,000 people filed unemployment claims in the recent weeks. So we really are at an extreme. You got to see the housing market come off or the labor shortage get resolved before the Fed stops tightening.
And Dan, just to circle back to what you were saying before, maybe you start to see more of the trading aspects similar to, let's say, gold, similar to this reality of dealing with the inflation and the higher rate environment. For those who are trying to figure out why we saw such a big crypto decline at a time when there was this high inflation in the first place, could you make a case that the weakness we had seen already worked against the crypto argument of benefiting from this environment of uncertainty and inflation and higher interest rates?
Yeah, so I think that is a good point that when the Fed was printing trillions of dollars of paper money, it was very easy to say, oh, then that means crypto has to go up because it's a fixed quantity thing. With the Fed not printing any more money now and potentially quantitative tightening, there is this kind of instinct that that also must be the reverse for crypto, and so crypto should go down. But I think when investors look at their options to invest in the space, stocks, bonds, real estate, commodities, they're going to come to the conclusion, if they agree with me, that the rates are going to head towards 5% in the U.S., that most of those other interest rate sensitive sectors are not going to be good, and they're going to want to put money in things like commodities, oil, Bitcoin, blockchain assets.